Singapore's top 20% of household holds 5.3 million Singapore dollars in net wealth. Let's take a look at this article. The top 20% of Singaporean households have 5.3 million Singapore dollars in net wealth, and this is the source from MOF, Ministry of Finance. Now, that's a real catchy title, right? And the data is not plucked up from thin air because the source is from the government, Ministry of Finance. So it's definitely not some made up numbers. So some of you may be thinking, where do you actually stand? And here are the actual results where they show the average household wealth table. From the bottom 20% to the top 20%, their assets and liabilities. And if you look at the total wealth number at the bottom, the top 20% is at $5,264,000. So if you think that a $1 million net wealth millionaire household and you think that you have made it, you are rich, you're barely just scraping past the top 60% household. But the good news is you're still better off than 40% of Singapore households. So in this video, let's examine and break down the results to help you understand the data better. And if you're new here, hi, my name is Chris, and I'm an ex-chartered accountant, and I run a Telegram group of close to 23,000 members in the Honey Money SG Telegram. So you can join us for personal finance and money questions there. First of all, it's important to define what is net wealth. The Ministry of Finance defines the net wealth as the total assets minus the total liabilities. And in accounting terms, this is called the owner's equity or shareholder's equity, or sometimes we call it net equity. So what are considered your assets are basically your property values, your net CPF balances, and other financial assets such as cash savings and investments. And that includes your own stay property as well as your CPF balances. And we need to define net CPF as well, because that is the CPF balances net withdrawals as at end June 2023. It includes annuity premiums in the CPF life and excludes monies invested via CPF investment scheme or used to pay for housing. So you can see that they make a very clear distinction and definition of what is considered within the net wealth. But I guess the important questions to ask is, how does the government even know my cash savings and investments when I don't even record them or submit them? Well, there's just some food for thought. I don't really have the answer. But let's move on to the liabilities. So for liabilities, it mainly consists of outstanding mortgages, credit card, education, renovation, or personal loans, things that you borrow money to pay for a huge ticket item. But let's dive down deeper into the assets of the top 20% Singapore households. What do they really hold? The biggest one is the property asset value of $3.4 million. And that's roughly 60% of the total assets, which includes both the owner-occupied property plus any investment property. So what we can see here is that the top 20% of Singaporean households mostly have their wealth held within the asset value of their properties. And the main reason was because these people who hold real estate, especially multiple property owners before the ABSD, Additional Buyer Stamp Duty era, saw their net wealth propelled over the years and growing with the Singapore economy. So this is more applicable for the Generation X and Baby Boomers era, where they really enjoyed prosperity growth and they were able to buy multiple properties before any sort of additional buyer stamp duty. And if we look at the CPF balances of the top 20% households, it is around $0.8 billion, and that is quite a high number as well. Because the fact is that if you're a top 20% household, and you're able to buy so many properties, you're probably quite well paid and high income earner. So with that high income, you're also expected to contribute more to your CPF, both as an employee and from your employer. But let me remind you that CPF has an annual salary ceiling of 102,000, and so the contribution limit will be 37% multiplied by 102k, and that is $37,740 per year. Of course, that's excluding any voluntary contribution to Medisave or retirement sum top-up for tax relief purposes, but we're just talking about the normal mandatory contributions. Also, if these households have used a large proportion of their CPF OA to pay for their property, they will enjoy a big inflow, especially when they sell away their property and the profits that come in. And for the financial assets of the top 20% households, it is around $1.4 million. And this number is around 10 times of the middle 20% household. 10x, that's the difference. So you can see that all these top 20% Singapore households, it is not all in. into properties, right? They do have financial assets, maybe from their stock investments or bonds or unit trusts or other kind of financial assets. So they kind of diversify away. But you'll realize that their property or real estate exposure is more than 2 times the financial assets exposure. So this really tells you that it comes from old money, generational wealth, okay? Assets that can be passed down, especially properties passed down from the grandfather generation to the father or daughter generation. So I know that many of us are not so fortunate to have generational wealth or even old money. So what to do if we don't have all these opportunities? Then you should start investing and build your financial assets today with USmart.
USmart is a MAS regulated trading platform that makes investing convenient, intuitive, and easy to get started.
They offer diversified investment products like stocks, options, futures, ETFs, funds, CFDs, REITs, and etc.
across 5 global markets.
To help kickstart your 2026 wealth goals, USmart have a very hot promotion where you can earn an effective 8.88% per annum interest for 30 days. This applies to the Maybank Money Market Fund Class A SGD. How it works is that USmart will top up the fund's performance to ensure you hit that 8.88% per annum rate on your first 2,000 Singapore dollars to 8,000 Singapore dollars of subscription. So for some of us who are waiting for a good opportunity to enter the markets,
this is the perfect alternative to park your idle cash while you plan for your next move.
Just use my link to register for a USmart account and download the app. Head over to Wealth Plus and subscribe to the Maybank Money Market Fund. New users can also earn up to $200 of rewards when you fulfill the requirements of funding, trading, and holding based on the terms and conditions. So use my exclusive link or scan the QR code right here to get started with USmart today. Now let's talk about the Pareto principle or the 80-20 rule. And you would realize that Singapore's top 20% is richer than the rest of the 80% combined. Because if we sum up the bottom 20% up till the 61st to the 80th percentile, the total net wealth will be $3.5 million, which is still a wide gap away from the top 20% having 5.3 million net wealth. And you will see this interesting pattern that actually CPF is not a wide gap because it is still limited by the annual salary ceiling of 102k. The main gap is going to come from properties because the top 20% have enough resources to buy multiple properties and property prices have been through the bull market following Singapore's prosperity over the years. And even if you look at the 61st to 80th percentile, they only have around 861k of property value, which is like the resale value of a 5-room HDB flat. And if we look at the current property market prices, one private property is easily more than $1 million already. And that's just the entry-level condominium, assuming it is fully paid. But I think we can all agree that the era of the property bull market is very different from the past already. Because of the multiple cooling measures, it may not be as rosy as before in terms of the accelerated growth. The financial assets value of the top 20% households also beat the rest of the 80% hands down at 1.4M versus their total of 0.8M. And for us, the millennials and Gen Zs, if we cannot capitalize on the property asset boom, then we really need to strategize on financial assets like investing. Overall, if we look at the results, the top 20% Singaporean households is really superior compared to the average. If we just look at property, it is 3 times the average, the CPF is 2 times, and then the financial assets is at least 3.6 times. But actually, the top 20% also manage their liabilities quite well because despite having multi-millionaire net wealth, their average liabilities is only 331k. That means that most homes are fully paid and the debt to equity ratio is around 6.3% of the net wealth, which is quite healthy compared to the average debt to equity, which is around 8.7% of the net wealth. And if we look at the bottom 20%, the debt to equity ratio is 24.2%, which I can fully understand is really tough to build wealth, especially when a large proportion is still in debt. So the takeaway of all this data is that when you hear the top 20% having 5.3 million in net wealth, it is not really about crazy stock picking or side hustles. It is about time, property ownership, and compounding all these values over decades. Because more than 60% of the net wealth actually sits in property value. And even CPF makes up a meaningful chunk of their total net wealth. So the rich, they actually capitalize on CPF a lot. And despite their multi-millionaire net wealth, they are not debt-free either. So I really want you all to adopt this mindset that CPF, the rich is also using it. And the rich also use debt to their advantage. So don't avoid all this financial knowledge that I always continue to educate through my channel. Because the top 20% rich people also use leverage to their advantage instead of clearing debt for a peace of mind. So the real takeaway today is not how to become a millionaire overnight, because that would not happen. I think the important lesson is that, am I building assets and wealth that can compound over time and guarantee my retirement in my late years? Because you will soon realize that wealth in Singapore is slow, it's boring, and based on property. But that's all old money. That's all generational wealth. If you want to build new wealth in today's economy, you really need to start to invest in yourself, get some high value skills, and invest passively into financial assets that can compound over time. And all these small little steps will lead to a bigger portfolio when you decide to retire. And remember that for beginners to investing, you can also consider using USmart to take advantage of their promotions. So if you enjoy this kind of financial analysis based on government statistics, please help me comment Wealth+1 to show some support. Thank you. And if you want to watch a related video where I went through Singapore's income salary that people like to talk about, then you can refer to this video right here.